Hi, my name's Rob Hart. I'm from Upscale Funds Management and we're launching a new fund called Carbon and Renewables Farmland Fund, or CARFF as we like to call it. CARFF is about an agricultural property trust that is raising funds to buy 2 or 3 properties, of which we are looking to do investments over and above what the traditional income streams of grazing and capital growth are. Things like a wind farm development on that property, or a carbon project on the property, or developing biodiversity offsets on that property. So that's what we aim to do in the raise of the fund. But essentially for investors, you need to think about, why would I invest in this particular fund? Well, firstly, the fund targets some strong returns. 22% per annum return on invested capital is what we are targeting. A 15% return on an internal rate of return is what we're targeting. But equally, it is a growth fund, so we aim to develop the fund and send the money back to investors after about 5 or 6 years. So there are other reasons that you might like to consider when investing in this fund. For a start, there's multiple income streams. Multiple income streams means that there's reduced risk and a good diversification across the fund. We've also had a good track record as managers of funds before. Most of our funds have done it very well, and we continue to do so. But what we've shown is that we've got a good ability to find land with different income sources, and that we can develop those to get greater returns and less risk in the funds. The directors of Upscale Funds Management, which is our company, which is the investment manager for the fund, will also act as foundation investors, as we do with all of our other funds. So we're investing right alongside those investors who decide to participate in CARFF. A good example of an alternate asset is Australian farmland. It has grown by about 8% per annum for the last 20 years. Now, that doesn't mean it's going to happen for the next few years, but certainly Rabobank believes that there'll be growth of about 4% per annum. So it's run quite hard. But the good part about farmland is that it's relatively non-correlated to other markets, like the stock market, like the residential property market. It doesn't necessarily correlate to what happens in those markets. So it's a good alternate asset. Equally, there's significant barriers in what we do. It's very complicated in the regulations, particularly in carbon and biodiversity. So there's not many other players out there that are doing what we do. So we're unlikely to see competitive forces interrupting what we hope to try and execute as a fund. This fund also is a good ESG investment. It's got social and environmental and governance aspects to it, which make it quite an attractive to an investor's portfolio. Equally, it's good for an investor, but overall, if we execute our job well, it's going to be good for the environment. So I'd urge you to have a look at the fund, to go deeper into the IM, to contact us and to get more information about it, and have a look at the Carbon and Renewables Farmland Fund.